We are here again, folks. This is the Schaefer Stock Market Podcast, and I am Josh Selway, your host, friend, confidant, whatever you want to call me. I am here to bring you another brief, quick, non-intrusive rundown of some recent stock market developments and financial news. This podcast is being recorded on Friday, February 15th, 2019. Let's get right into it. In recent podcasts, I spent time going over some of the macro events playing into the market. There's been a lot of things happening in 2019. Trade, you have a lot of political developments, and these general fears about a slowing economy, both in the U.S. and around the globe. But this week, things have settled down a little bit. There's this tentative deal. Well, I guess I shouldn't really say that, but there is a tentative deal to fund the government to avoid another government shutdown. But then, of course, President Trump is supposedly about to declare a national emergency to get funding for the border wall. Still a little more drama than people would like, suffice it to say, from the political spectrum. But still, this week, stocks were coasting for a bit there on hopes of this averting another government shutdown. And then, of course, seemingly some progress being made in U.S.-China trade talks. But again, on CNBC this morning, they were suggesting that still the biggest issues between U.S. and China, namely intellectual property, is the really big one. Progress apparently has yet to be made on that issue, as well as a few other big issues. So nonetheless, stocks early in the week benefited from hopes around progress in these trade talks. And I know I've heard a few different people on CNBC say that they are expecting a deal to get done. I've read different articles about people suggesting they expect the deal to get done and when a deal gets done. And that all sort of sounds like to me people just saying that they hope a deal gets done, because obviously that'd be good for the markets. And I think it's just natural to expect a deal to get done, because you can see a time when stocks go higher because of this, and people just sort of think, let's get that out of the way and get going. But as I said, there's a lot to get through between these two countries, so I don't know how long these could last, these trade talks. I don't know what the outcome could be. That's not my specialty, but I just know that there's still a lot to be worked out, and maybe President Trump will extend this March 1st deadline on the tariffs. That could help. That would help the market, but still a lot to get through there. You know, just as I was working on this podcast, Bloomberg came out with a report that said that countries are still far apart on a trade deal. The Wall Street Journal was reporting that China was offering to buy a lot more chips made from the U.S., semiconductors, but that is not something that the Trump administration will just go for right away. It's hard to say how they feel about that. And the Wall Street Journal also, in the article I was reading, pointed out that smartly that the Trump administration has to be thinking that they essentially just had to give in on border wall negotiations, so they may want to play these trade talks even tougher. I don't know how him declaring a national emergency plays into that theory, but just something to think about there. And then, of course, on Thursday, we were greeted with this dismal retail sales update, which really caused quite the stir throughout the market. It showed the largest drop in retail sales month over month in nearly a decade, and that was, of course, for the holiday period. It was for December. You know, that raised the question about a recession, what's going to happen there. A lot of economists, though, were skeptical about the data because it was such an outlier, but we'll have to see going forward. And speaking of the broader economy, I also want to touch on this because as the presidential cycle heats up for 2020, that's not something we can ignore when you're covering the markets, and especially the ideas, tax ideas that are floated around. And, you know, especially if some of the big drivers of the current market, these tech companies, are under a lot of scrutiny. You know, obviously some of these Democratic candidates are looking at Wall Street, big banks, et cetera, et cetera. In our current political landscape, I should say that I don't really care about politics either way. I stay pretty neutral, and that, you know, that goes for me personally, and obviously for my job, I have to do that and see things fairly and clearly, not let emotion or anything like that get in the way. So that being said, I did want to touch on this candidate, 2020 candidate Andrew Yang, who popped up on the Joe Rogan podcast. I actually heard him back on the Freakonomics podcast a while back. Forgot about him for a while. Some of his proposals, I remember thinking, seemed Well, they're definitely different. That's for sure different than what you're going to hear from other candidates. But he was on Joe Rogan's podcast, and he went through all this data. He was a former entrepreneur, and he had all this data about what's happening in the economy and how automation is going to keep killing our jobs. And that has pushed him to push for this idea of a universal basic income, which he calls the freedom dividend of $1,000 a month for every American, no questions asked. This is interesting stuff. I didn't think this issue would come to light this quickly. This was something I just started hearing about in recent years, this idea of a universal basic income. But here we go. We have a real Democratic candidate pushing for it, and he has all these reasons why he thinks it's a good idea. So if you want to check into him, you can. But for our purposes, the biggest takeaway from this is how he wants to fund this freedom dividend. And his idea is that since job losses are going to come from automation, he's considering new taxes, specifically a value-added tax on the companies who are going to benefit the most from artificial intelligences, such as Amazon, Google, other tech giants that you could probably think of yourself. Yang is focused on truck drivers, where he predicts a bunch of truck drivers going to be replaced by autonomous vehicles. Just today, actually, news hit that electric truck startup Rivian announced a $700 million investment round led by who else but Amazon. So I just want to throw that out there. That's some interesting stuff from the political spectrum that could eventually affect the market. And if he's making a push later in the presidential cycle and he has these ideas about additional taxes on Amazon and the other tech giants, that's definitely something that we should pay attention to. So let's move on. Let's go to Apple. And Apple is reportedly expected to reveal its new streaming service in the coming months. They've planned an event for March 25th where they have apparently invited a bunch of Hollywood and, excuse the term, elites. According to this Gizmodo article I'm reading, Apple is supposed to announce an apparently different streaming service as well, just for news. The big takeaway here is that it's reportedly seeking 50% of the money made from the deals it strikes with news organizations for this new streaming service. Just for news. Apparently there's also another streaming service that'll compete with like Netflix, and it'll make its own entertainment and license entertainment from other companies. But the other big thing about this news story was that for now it appears Apple is going through with this new streaming service without the help of Netflix, or not working with Netflix at all. Of course, in the past, a number of Wall Street analysts have floated the theory that Apple could buy Netflix. Who knows if that'll ever happen, but for now, at least, it seems Apple is going Netflix less for the moment. And it's interesting, with streaming, it feels like Apple was again late to this trend. Last time it was home speakers, and it seems a lot of people, that's complete with Apple, that they haven't been as innovative in recent years. Again, it kind of feels like they're later to this trend, but at the same time, I'd point out the iPhone is so popular, people have it right there. It might make it easier for people to adopt Apple's streaming service when, if it's integrated on their phones. Just some thinking there. But, the streaming services, it's going to be tough to see how these play out. Will Netflix still be the most dominant streaming company 10 years from now? What if people really like Apple's new service? How many streaming services can people actually pay for? I know I just switched to the PlayStation Vue TV service, and, if you also get Netflix, ESPN Plus, Disney Plus, which is supposed to come out this year, well, if you add that onto what I'm paying for PlayStation Vue, I'm up to where I was paying for TV originally, up around $100 a month. So people I think, are going to have to pick and choose eventually. Getting back to Wall Street, I would just thinking about how this might play out. And ESPN Plus, as that gains traction, that's their streaming service. Disney Plus, which is supposed to come out later this year, and then Apple's new streaming service. We could even include Spotify in this, the music streaming company, which continues to add subscribers. And, just what I'm getting at here is that in the coming months, could we see analysts suggest that Netflix could struggle with all this new competition and all these new competitors stepping into it? And not just, competitors. These are heavyweights. This is Disney. This is Apple coming after Netflix, and they're already dealing with Amazon. And HBO Go continues to try to improve, especially after getting picked up by AT&T. A lot of money getting funneled in there. So I would watch for that trend this year. We'll see if that happens. If analysts start to call out the competition threat for Netflix, and if that is something that becomes a theme and eventually starts to weigh on Netflix stock. Let's touch on Reddit for a minute, a company we don't hear much about, obviously privately owned, but there was a time where I'd check in on finance Reddit to see what people were talking about over there, and it seemed to be just people discussing how they'd lost an ungodly amount of money on some speculative bet, or someone else discussing which of their Lamborghinis that they're going to be driving that day thanks to their Bitcoin profits. Reddit is coming up this week because the company just announced it had raised another $300 million, which puts its valuation at $3 billion. And according to Business Insider, Reddit has about 330 million monthly active users, which is roughly the same as Twitter. And that's interesting to think about. So the question is, can Reddit become a real player in online advertising? That's obviously where they're hoping to become a big business. And as I alluded to, my experiences on Reddit, though they've been very few, have been somewhat goofy. You have a lot of different people in there. You don't know who they are. And it's a platform that I think a lot of people suspect is just used for like conspiracy theories or secret meaning behind Breaking Bad, the show, or these different types of things. And that could be an unfair characterization of Reddit. The company continues to try to push into the online advertising space where obviously Facebook is dominant, and it'll be interesting to see if they can gain momentum and legitimize themselves and start to become a real player in digital advertising. All right, how about some stock news? And not just some stock news, how about a stock of the week? We covered a lot of different stocks this week over at Schaefer's, a lot of good content up, but one name I just wanted to point out that had a very solid showing in the earnings booth, and especially this comes with so much focus on the chip sector. And this stock that I wanted to point out is Lattice Semiconductor, ticker LSCC. That company just reported earnings this week, and the stock surged to roughly 15-year highs. Lattice was last seen trading around $11 per share. If you go back to late 2018, that stock was down near the $5 mark, so it's doubled in recent months. Again, strong quarterly results, and it was actually just named a top pick from Jefferies, which set a $10.50 price target. So obviously Lattice is already above that mark, but Jefferies named Lattice Semiconductor as its top pick in the small cap space. And if we had a runner-up for stock of the week, I would choose Electra Mechanica Vehicles, ticker SOLO. That stock exploded this week. There was news that while the CEO, Jerry Kroll, said that the company was considering taking over a shuttered General Motors plant in Ontario, the shares were all the way down near $1. And this week, they jumped to almost as high as $7 per share. They were last seen trading around $4.90 per share. So a huge week from Electra Mechanica, ticker SOLO. And as for a brief rundown of this week's options activity, we noted how weekly options traders were betting on the semiconductor sector. This was when that Wall Street Journal report hit that China was considering offering to buy more chips from the US. So options traders hit up the semiconductor sector, and we noted the options activity on the semiconductor ETF, ticker SMH, and also Advanced Micro Devices saw an uptick in weekly call trading, ticker AMD, and Micron Technology, ticker MU, saw some notable options trading as well. There was also a seven-figure bet that we called out on the consumer staples sector, and there was also an article over at schaefersresearch.com where we discussed the put activity that followed the ugly retail sales data, and traders were hitting up the retail ETF XRT. So you can check all that out over at schaefersresearch.com. All right, I'm going to wrap it up here. Please check out Schaefer's over on Twitter, StockTwits, Facebook, Instagram, or just go to schaefersresearch.com. Check out our free newsletters, or if you have any questions, check out our extensive education section, which can help you with a number of different options trading methodologies and terms. But until next week, this was Josh Selway bringing you the Schaefer Stock Market Podcast. We'll see you next time.